I'm your host, Hillary Bricken, and this is the Cannabis Law Now podcast, where we regularly discuss issues related to the cannabis industry, including investment, day-to-day operational issues, and potential reform on the horizon that will impact all cannabis businesses and investors in the United States. Hey, everybody. Welcome to the podcast. Today, I have a super fascinating guest. She is my first, what I would call institutional cannabis investor on the podcast. And so far, my first female participant, which I'm very excited about. She's going to bring, I think, an improved perspective to the conversation based on her many, many years of experience in the cannabis industry. Today, we have Emily Paxia, who is the co-founder and managing partner of Poseidon Investment Management. Welcome, Emily.
Thank you so much, Hillary. Thank you for having me here today.
Yes, I feel like I'm in the presence of, some deity, godlike person because you're still here. And I say that a little bit tongue in cheek, but it looks like, and we're going to talk about this, but the fund, your funds, and your investment finance presence, you have been around for a decade plus, which in cannabis years are like dog years, in my opinion, right? You've probably heard that before. That makes you about 1,000 years old in this industry.
We are dinosaurs for cannabis investing, for sure. We have seen a few turns in this cycle of this emerging market, for sure.
Yeah, I can imagine. So let's jump right into it. Were you and Poseidon maybe the first cannabis fund ever on the map?
Yeah, for a long time, and you will appreciate this, our lawyers were saying, you can't say that, but now they're kind of like, actually, we think you can say that. There were other companies that were investing or allocating into the industry, but the way they were doing it was a different structure. And so from a kind of a diversified fund, actively managed institutional perspective, I think we were probably the first to actually do it.
And, back to the legal fears, because when I jumped in 2010, it was unheard of that corporate attorneys, transactional lawyers would participate. It was not a thing. And I was back in Washington State, right, which predates legalization and really getting its regulatory act together. You don't have to invade the attorney-client privilege, but generally, were your lawyers telling you, Emily, you could go to prison for doing this? I mean, what was the general kind of attitude then?
Yeah, we're based out of San Francisco, and I think there's a little bit of a pioneering mindset in San Francisco where it's, been the gold rush, the tech era was born here, truly. I mean, between here and Seattle, really. And I think that pioneering mindset came in very handy for us when it came to sourcing our legal support. And, I'll give him credit. Bart Mellon stood right by us and puts together a lot of funds and tends to be a forward-looking person. He does a lot of kind of emerging sector things. He was also early in crypto, helping crypto funds form. And I think he just saw that. But I mean, I tell everybody every day, I just read my own PPM LPA and it gets me a little sweaty around the collar when I look at some of the risks I've taken on over the years to be the manager of this. And, when Morgan's my brother and business partner, when we were putting this together, we truly did want to put together the infrastructure to be an institutional investment firm in cannabis. We launched with one fund, but we always had aspirations to have more products and opportunities to allocate capital into the sector. And when we did it, 2012 is when we really started to put this all together. First day of trading was January 2014 when Colorado opened, actually delayed launching the fund through 2013 to do that. So we would hit the timing on that, right? It's all about timing. But he and I, we really did like the exercise of looking at the worst case scenario of how this could go, being allocators of capital into a Schedule 1 product that was only technically kind of medically legal, but not really from a business standpoint in a few markets. And then, adult use opening in Colorado, then followed by Washington and Alaska of all markets. But it was a real risk that we looked at. And just another interesting piece on that is that our very first investor was a lawyer. And I always say the reason, and actually followed by a few other lawyers. And I always say there was this delta between perceived versus actual risk. And I think that they saw that as the opportunity to get in. And they've done really well with us over the years. So I'll never forget them.
Your foresight is outstanding, I think, to approach the industry in this capacity. How in the early days, I know you mentioned the attorneys who I think would intimately understand actual versus perceived risk, great degrees. How were you able to get other investment with something so legally precarious? Because I know when I would talk to people, they would either be all in, guns a-blazing, Woody Harrelson, natural born killers, or going to that, or they wanted nothing to do with it.
For us, we realized we had to be an educational platform and an informational platform as well as investors. And it's, one of the things when you really want to become an expert or completely immersed in a category is to digest it and then to educate other people about it, because then you know it inside and out. And so we just became a source of information. We also we leaned in incredibly close on the policy side. So the first thing we did was we joined the NCIA. And then right after that, we joined the Marijuana Policy Project. We joined the CCIA. I mean, we have been involved in every possible way to support the reform that would be coming from a legal standpoint on the industry. And I was on the board of the Marijuana Policy Project for a period of time, which was incredibly educational experience for me because I didn't come from a background of politics, but I'm a voracious student and will learn whatever I can take whatever I can get my hands on. And at the time, the Marijuana Policy Project was actually not a business organization. They were focused on changing laws around cannabis from a criminal justice standpoint. But, Morgan, my brother always says, my baby brother, who's quite wise, and I call him the little Buddha, but he was born with a calculator in his hand, by the way. But he always says capital is a change agent. And I think that's the absolute truth. And so if you wanted to be a part of the change, you had to lean in on it. But I think that gave our investors who would end up joining us comfort because they knew we were so actively engaged and involved and very clear on the risks and the opportunities that existed based on how laws were changing and the perception of lawmakers around cannabis. So we had the timing pretty well because the Cole memo, there's 3 versions of the Cole memo, but the first and second happened very quickly within the time that we were launching the fund. I think the first was in August, right before we launched. And then the second one, I think, came out in like February or March right after we launched. So good things were happening that were showing directionally positive evolution around cannabis and the perception of cannabis as a legal market.
Right. And those were, in my opinion, those were good times when the DOJ was willing to show the enforcement hand and brought some sanity to the madness that is the state-federal conflict. And we kind of have not seen that since. And on the back of that, I really want to know, because I feel like, similar to me, you've probably seen it all because you've been around for years. What have you seen as a seasoned investor, as a corporate advisor, evolve and change in the last decade plus?
Well, I think a lot of folks are very, very much hung up on a couple of catalysts. I break catalysts down actually into 2 things. I view there are catalysts that actually drive growth and fundamental improvements in these businesses. And I would say those are new states opening. Those are, more and sophisticated and better service providers coming in to support the industry, like better law firms over time, better insurance providers, tax audit, all of those things that improve the fundamentals and the governance of these businesses as this industry matures. So those are different kind of business fundamental catalysts. And then there's these exogenous catalysts that I think are the gatekeepers of capital flowing into the industry. And those would be things like the Safe Banking Act, the scheduling of cannabis, these various things at the federal and legal cases working through the judicial process. So I think those are different things, but I don't think we should overlook the amount of change that has occurred over the last 10 plus years, where now over half of the United States live in a state where they have legal access to cannabis. We have a cannabis native generation of Gen Z that's entering the workforce with share of wallet. And when I talk about things, it's always 21 plus. I just want to set that as we never are talking about it unless it's a medical situation where cannabis is a medical platform for someone with like epilepsy or something like that. If I'm talking about recreational, it's always adult use above 21 plus. I always just like to set that standard for anyone listening. There are folks entering the workforce with a share of wallet they can allocate to cannabis over alcohol. And we know this is a generational trend that's shifting in our society. And I think that the confluence of that with also what's going on with the potential of federal reform plus new states opening, and the Gallup poll results just came out yesterday or recently, and we're at 70% approval rating to legalize cannabis across the United States. I mean, I make the joke that we can't all even even get aligned on our pop stars or Taylor Swift, for God's sakes, like fluffy things like that. But we can get aligned on one thing, and that is cannabis legalization. So I don't think this means cannabis legalization is coming overnight, but I hope that these politicians in this election cycle are taking a look at how their constituents are leveling up on this particular issue. So those are a lot of the things that I've seen change. I've also seen an arc of a business change in our industry. When we first started investing in this industry, some of our investments were in Canada, and like a metric that was thrown around then was unfunded capacity, which we always were nervous about that metric, which is essentially saying like how built out is their capacity to cultivate cannabis to distribute through the infrastructure of the legal market. And I would say there was not a lot of good shepherding of capital at that time. It was very hype driven. It wasn't really based on how the shape of these businesses would actually. Fast forward to today, where we have not had capital flowing into the industry. And actually, for anyone who's kind of newer to this or hasn't been paying attention to it, you can see where the stocks started to sell off in, I think it was February 2021 when the Archegos event happened with Credit Suisse, which no longer RIP Credit Suisse. But, we lost a lot of custody for stocks in the industry. And so we lost a lot of institutional capital. And without the size and long view of institutional capital on a sector, the industry has been very undercapitalized. And it's gone from there too. I mean, then, all of the things happened since then with the failure of reform at the federal level around perfunctory banking legislation, things like that. None of this means that the businesses of cannabis aren't continuing to be interesting. And so where we are today and what we've seen this amazing arc come out to is that we really do have a better understanding of these businesses. We know what to look for in terms of SG&A containment, gross margin percentages, EBITDA profiles, and you can really examine these businesses and have stronger and clearer expectations of what a good business should look like in cannabis. And then alongside of that, all of the ancillary technology platforms have just grown and grown and grown. And there's just amazing evolutions in those technology solutions and also in the data that those companies are capturing around consumers of cannabis.
And what are some of the sectors in cannabis or the companies in cannabis that Poseidon's had faith in, so much so that it invested? I know it's fairly diverse because Poseidon's information on its website is pretty candid about investments over the years. So can you share that with us?
So we were early in Canada when the cannabis companies up there experienced massive valuation growth. We took our returns off the table and did very, very well and rotated our capital into the United States. And we were investors early in companies like GTI when they had 30 people at the table. And so from there, and I mean, the phrase, the acronym MSO did not exist at that time. Now we all know what a multi-state operator is. Yeah, we were investing in Canada before people called them LPs or licensed producers. So it's like, you're kind of investing in the actual business before it becomes like this popular concept. But what we like in the US are focusing on markets where there is clear regulation, legal versus illicit operations. We like full vertical. We're very interested in kind of looking. And by the way, it's not how we thought we would want to invest, but we've seen how it plays out where if you're just in the cultivation, you can be susceptible to certain market issues or regulatory shifts even versus what goes on the full vertical. Same thing if we were in the middle of the supply chain on manufacturing. So we've seen how regulation and enforcement can actually impact disproportionately those aspects of the vertical. So now we kind of like the full vertical, or we really just like retail. And so that's kind of where we've evolved to, although we've invested across all of those things: pure cultivation, pure manufacturing and distribution, pure retail, done very, very little in pure brands. And it's because being someone who came from a background of research and consulting on consumer products for companies like PepsiCo, I know how difficult building a brand is and then maintaining market share on a brand is. So I had just enough information to scare me enough that we avoided a lot of the frothy investing into brands and have focused more on the verticals. So we like the verticals. We like the states where they enforce legal programs. We're still actually in California because I'm still a big believer. This is like the tip of the spear of what a mature market with great brands and products can look like, even if it's incredibly hard. And I do think the state could be doing a better job to get more things open and to help consumers have more access and maybe rethink the way the taxes are done here. But nonetheless, it's kind of like I have associated it with an athlete training at altitude. If you can make it in California, I think you can make it. And if you can run a marathon at altitude, you can run a marathon at sea level with your, eyes closed. So I think anybody who does well in California could be like a leader and have to do well in other markets. We like that. On the technology side, we have done things on the retail optimization and point of sale, which we love. And those investments have gone pretty well. And then we love the data side of it because of everything I'm talking about here. I mean, this is at the end of the day, a consumer product. At the end of the day, it's eating into the BevAlc category off a low base, but it's coming. And so the value of that data and the consumer trending around health and wellness through to just pure consumer lifestyle stuff in cannabis is going to be valuable and interesting to people when they finally start to come into the sector.
Yeah, I think that's right. Now, a little bit about these past investments. Can you give us maybe the makeup of your top most successful investment? And then I got to ask it, maybe the profile of the worst, meaning what elements made up your most successful investment? And I know that's very broad. And then same question for maybe one that gave you a little heartburn.
I would say we've done incredibly well in a number of things. Like, for example, we were early in private in Afria, which those new to the sector wouldn't even know who that is anymore because Afria is now Tilray, which was here. I mean, it's like there's so many iterations to these companies, but we were in that thing sub $1 Canadian and we rotated out of it on like a very beautiful multi-digit X return on that thing and rotated it into the US. We did really well on that. GW Pharmaceutical was our first investment in the first fund that we saw a great outcome once Epidiolex hit the market and the clinical trials had proven out on that thing. We had some other great, I would say GTI. I always called it the quiet riot. We were in it early and we invested time after time after time into that company. And it was a quiet riot. They weren't the frothy Medmans or Acreages of the world. They have just been focused on preserving and growing shareholder value and have done that well and focusing on, balance sheet preservation, all the things that they needed to do. And I feel like they share a little bit of the like Buffett Munger mindset with Morgan and I about how businesses should be, good businesses are run. That has been a great returner time and time again for us. So those are just some of the good ones. There was a famous flame out that we had that was written about in Inc. magazine by Will Yakowitz, which was Tradive. That one, I would say, like that was like the first crystallizing moment in the importance of board compositions and corporate governance. And it was for me also a formative moment where there was this pivotal point, and I don't even remember this guy's name, but we were on this board meeting, and I had a very strong point of view, which ended up being the right point of view because my intuition was very strong about what was happening in this company. This guy like basically shut me down, and so I kind of retreated, thinking, "Oh, I must be off base here, but I'll never do that again." And so now I've always been a very vocal board member if I'm not comfortable with something that's happening. That was a disappointing flame out. It had a lot of promise, that company. But this is why from that moment forward, board composition, co-investors, everything became, and what we were able to rescue out of that was accomplished through good co-investors. So, it cut both ways on that project, although it ended up failing in the end, thanks to a stupid lawsuit, which I will say it was a bad lawsuit. But anyway, but then these are the things that can kill companies. You have to have good corporate governance and levers around managing through the chaotic environment of a startup.
I hear you. And on the back of that, given kind of the flat nature of the industry right now from state to state, you mentioned California, it's incredibly tough for both macroeconomic factors and regulatory reasons. You ever thought about cashing out completely and bailing? And, if not, what keeps you coming back? Why do you hold the flame of faith that this potentially will explode? Is it the data? Is it the intuition that you mentioned? What is it?
I think it's a confluence of factors that keep us coming back. First of all, we're mission-driven investors. Like, we believe that cannabis should be legal and that people should have access to it, both from a medical standpoint and from a lifestyle standpoint, especially instead of alcohol. I mean, look, I love alcohol, whatever. It's great. Big fan of tequila, but I think that I want people to have options and I believe in the liberty of choice. So all of that, like aside, I think when you're mission driven, I think about people who I admire, like Steve Jobs. He was incredibly passionate about his product and everything that Apple would stand for. And that's how he got through the various cycles of that business. It wasn't a straight line up. It never is. So what has kept me here is that I just try to stay very, very close to what's actually happening in the businesses, what's actually happening from a political standpoint or like the constituent acceptance and support around this issue. And I just believe, when you come so far in something, to throw in the towel, to capitulate at this point, even though it's been a very, very difficult cycle. 23 was, the worst year that we've had to manage through in terms of what really finally hit the road on this sector in terms of the fallout of lack of capital flow, lack of reform, and all of the things that happened on the federal level. And I think that was really what really catalyzed the challenges of 2023 was when the safe banking failed to get included in 2022. So it was a chain reaction of events. And then, there's a lot of factors. But what I see right now is the most amazing setup after doing this for over 10 years is you have a generational consumer shift coming to cannabis. Like I've always said, the easiest thing about cannabis is that there's product market fit. And that's just for the bell curve. As the bell curve widens out, there's so many canna curious people who are coming into the category now. So our tip of the spear of the cannabis enthusiasts who've been here and who are ready to participate in this adult use market. Like, I'll never forget when I went to the Ascend store in New Jersey and nobody knew I was an investor. I was just going. And the fact that I could chit chat with people waiting in line in the winter, looking forward to getting in. And they were like, how cool is this? We can buy cannabis, like unsolicited, telling me how excited they were to have legal weed in New Jersey. Like those are the things that keep me going. Seeing patients who have access to good cannabis products that they didn't before, those are the things that keep me going. But from an investment standpoint, it's the setup that I can't get over, which is that consumer shift. So a growing TAM. The more states that open, like Missouri and Maryland, when you look at the states when they open, it's just incredibly exciting to see the sales data and the growth and the diversification of product and baskets that happen with the consumers, which shows, again, kind of that broadening of the bell curve. And then I see the setup of the catalysts that all the people outside of the industry are waiting for, which is the potential for banking reform, the potential for, a lawsuit against the government that changes the application of the CSA to these legal businesses within states. And the third being, of course, the scheduling of cannabis. So I'm seeing a number of things setting up, and that's what I can't look away from it because I've been here too long building businesses this whole time to do it. So got it. The only way out is through, but it's not been easy. If anyone thought it was easy, they should spend a day with me. I could scare the pants off of anyone about the things I've seen in an emerging market like this.
Yeah, I bet. And there are so many exciting things about it. And maybe one of those things is the last thing that you mentioned, kind of in the pillars of reform and huge catalysts, which is this potential on the horizon for a cannabis reschedule. And I keep saying, unless you're living under a rock, you know about this, right? This is the biggest thing potentially to happen to cannabis in decades and decades of prohibition. It is also, in my opinion, one of the most annoying, loud, hearsay-filled things that's happening in the industry. And I find these things insufferable because nobody, no lawyer, no regulator, nobody has a crystal ball. And this is complicated, complex administrative rulemaking with potentially the public health and safety of millions at stake, not to be dramatic. But if Schedule 3 happens, number one, what happens in your world as an investor, as a wholesale cannabis investor? And two, what are you paying attention to about Schedule 3 as an investor?
Yeah, sometimes I'm like, oh, is this just me after 10 years of being battle tested by waiting for something to happen and then it happens or doesn't happen, or the rescission of the Cole memo, or all the things that have happened through the course of having invested in cannabis, or even the exogenous stuff that happens, like the Archegos event, which changes the custody around the stock, things like that, or the risk profiles, or like Cowen gets bought by TD and all of a sudden now they won't let you, hold stocks with their, there's a lot of things that have gone on. So then when I see people boiling down such an important and complicated thing as the DEA approving the scheduling recommendation that came from the HHS and putting it forth as policy or as a framework. We cannot be too reductionist about this, and we have to think about every corner we have to look around associated with this. And maybe it's because we had an investment in this company called Pax, and then Juul spun out of it. And anyone who's watched what happened with Juul knows what it's like to try to work with a federal agency. The FDA really slapped around not just the e-cig market, but Juul in particular. And the only thing I know about that is that the opacity of how these decisions are made is immense. To say we have a crystal ball is insane. At best, we have like an opaque rock that we're looking at to try to understand what the DEA is going to do. And I always one thing I learned when I was on the board of the MPP is like trying to understand the motivations of the groups who are involved in the decision making. The DEA is going to take this very seriously because the DEA has funding around the enforcement of narcotics, and cannabis is a Schedule 1 sitting right in their wheelhouse of things that they get funded to oversee. And this is kind of embedded in the culture of the DEA around narcotics, is the perception around cannabis not being a positive one, not being one where there are good things coming from it. And you can just go back and look at the history of this with President Nixon too. So there's just so many things around this that I think it's just going to be a little bit more tumultuous than I think people think. And then so then it's Schedule 3. So what do I think about that? I'm very excited because I do think it deserves to be moved out of Schedule 1 and God forbid it goes into Schedule 2. Schedule 3 is fine. We've always wanted it to be descheduled and treated like alcohol, but we know that there's not a constitutional amendment coming for cannabis the way that it came for alcohol. So I think that from an investment standpoint, once we find out what the DEA's point of view on this and what they hand down, we have to spring into action immediately to try to understand what that'll mean and what that'll mean in terms of, okay, and what is, we all talk about it as the exciting upside of the 280E tax code being removed, which is, egregiously applied to Schedule 1 products, for lack of a better word. So that's exciting, but how? What's that going to look like? And what's that going to look like from a federal tax perspective on the other side? I don't know. The IRS probably enjoys the revenue they see from 280E, and so does our government. And so what does that look like? So I'm not thinking this is like the silver bullet that solves all things, which is why we are pursuing other things, such as this case we're working with Boy Schiller on as an industry and helping out these defendants and trying to be people who pull things together. But one thing I've learned over this, course of time is you have to have multiple shots on goal to try to influence reform. And so I'm not somebody who thinks this is a silver bullet, but I do think, though, from capital coming into the industry, this is one of those catalytic moments. And so for that, I am excited because this industry deserves to be capitalized to drive innovation, to drive support for the consumers and all of the things that go on with investing into an emerging market.
Well, Emily, I'm going to let you go with that question and that sentiment. And I feel very confident that no matter what reform is on the horizon, either tomorrow or years from now, I will likely see you and Poseidon on the other side, hopefully in a very, very successful capacity for all of the time and goodwill put in. And I know personally, and I can share that with listeners, Poseidon has propped up many, many operators in this industry that are still rocking and rolling today. And without that, this industry would be way weaker for it. So Emily, thank you for your opinions, your insights, super valuable. We really appreciate it.
Thank you.
And that concludes today's episode of the Cannabis Law Now podcast. Until next time, stay alert, stay alive.